I kind of got into tax liens really on the wrong side of a tax lien, honestly. It's way small compared to standard real estate, but at $4 to $7 billion a year of tax liens that are sold annually, it was a pretty sizable space. Probably one of the unique things about this space is you don't need a license, you don't need a certified, you don't need to do really anything in order to buy them. It is as simple as go Google, right? Tax lien sale, and as long as you have an EIN, you can go sign up, register, put your deposit down and start buying.
I like the idea of buying tax liens. Like, where do I go to even buy a tax lien? How do I start that process? All right, ladies and gentlemen, welcome back to the Passive Cash Flow Podcast. I'm your host, Aaron Fragnito, co-founder of People's Capital Group, and we have the Tax Lien Pro here, a gentleman who's been buying tax liens and profiting off them and helping other investors profit as well for many years. We have Brian Seidensticker. How are we doing today, Brian?
Hey, Aaron. I'm well. I'm well. Thanks for having me.
Excellent, excellent. I wanted to have you on the show here because I have bought tax liens before. We have done decent with that. I think we got one for like $30,000 at an Irvington, New Jersey tax sale one time, and we accelerated the foreclosure and took title of the asset, and we got like a three-family property for like 30 grand. It's probably worth like $600,000 today. We still own it. So really good experience there. It needed a little work, but on that experience, taking title on property. And I know there's different ways to make money in tax lien investing. That's why I want to have you on the show here. But to our listeners, if you're enjoying our content, make sure to subscribe and hit that like button. We're out on all major platforms and podcast platforms and YouTube as well. And if you're enjoying this content, share it with a friend or a colleague who you think could benefit from learning more about investments and real estate and building their wealth. Here on the Passive Cash Flow Podcast, we have a new episode every 2 weeks. So let's dig into it here, Brian. So you are the Tax Lien Pro here. First, tell me a little bit about your background and how you got into this.
Yeah, I guess I kind of got into tax liens really on the wrong side of a tax lien, honestly. My I am not, an aspiring tax lien investor by any means. I actually grew up wanting to go to space. Actually, by training, was an aerospace engineer and worked in the missile defense space for several years. And I guess learned early on that that as cool as it sounded, didn't quite scratch the itch that I had as far as freedom, a daily feeling of accomplishment. And so, yeah, I really started, I'll say, dabbling in real estate, really on the fix and flip, style, early on while I was still in the aerospace industry. And we were buying and flipping properties in Montana, which is where I'm originally from. And it really got upside down. This is in 2007, 2008, got upside down in one of the properties. Ended up working it out, right? So didn't end up going through a foreclosure. But as part of that process, if you don't pay your property taxes, this is very unique to Montana. All potential investors, at least at the time, I think they've changed the statute since then, but at the time, any potential investor that might want to buy the tax lien on your property had to send you a certified letter. That was one of the weird, unique requirements that, Montana is the only place that you have to do this before the auction or the sale ever takes place. And so I got all these certified letters from all these different investors. And that's really what, made me go, what is this all about? It's one thing if it was one notice from the county, like, hey, and this is how most states work, right? Might be a tax lien sold on your property. Probably would have never thought twice about it, but the fact that I got all these from private entities is what got me really pursuing what this whole tax lien space was all about. Ended up buying a book. I can't remember the exact name of it, but there's like Tax Liens for Dummies, maybe. Realized like there's a whole space out there, a pretty large industry, probably way small compared to standard real estate, but at $4 to $7 billion a year of tax liens that are sold annually, it was a pretty sizable space, right? As far as revenue goes, it's really on par, at least on that time, with the NBA, and everyone's heard about the NBA, right? That just tells you the difference between marketing. And that's what introduced me to tax liens. And so really recognizing that, buying and flipping properties, latter half of the 2000s probably wasn't the best thing to be in.
Mm.
I pivoted, raised, I guess, some friends' money, a friend's family money, and again on the side started buying tax liens in Montana and Wyoming for several years. And that's really how I got into the space, Aaron. And it's been quite a journey since then, but at least that's the start of the story.
Okay. Okay. Interesting. Interesting. So let's kind of start from the beginning here. I'm an aspiring real estate investor, let's say, and I like the idea of buying tax liens. Like, where do I go to even buy a tax lien? How do I start that process?
Well, probably one of the unique things about this space is you don't need a license, you don't need certified, you don't need to do really anything in order to buy them. It is as simple as go. There's many websites now. One I'll say positive of COVID was, prior to COVID, maybe 5% of the counties out there had their tax sales online. Today, it's probably 75% of tax sales are online. So access to them has become immensely easier. And it is as simple as go Google, right? Tax lien sale in Broward County, Florida. It'll bring up, I don't know if it's Real Action or Grant Street website. You can, as long as you have an EIN, you can go sign up, register, put your deposit down and start buying. It can be that simple. Now, I'm not saying go do that,
Hmm.
but as far as access is that simple. The problem is because it's that easy, a lot of people do that and get themselves in some trouble. And so I would always recommend, right, somebody that's interested is start with educating yourself to some degree. And there's different levels of educating yourself from National Taxing Association has what they call an NTLAU, which is a high level overview of how tax liens work, like, through a series of modules you can do online. I think it does. They do a really good job of a high level overview of how the space works. You can actually go to the other end, right, which is you can hire essentially coaches in the space. That there's some that are, I'd say they're all good, but some that are very, very expensive,
Hmm.
like debatable whether you get the value that you're paying.
Sure.
I've also heard the argument of like it's the same argument with standard, college education today. Do you get your value out of what you're paying for that too? So, and then there's some that don't charge that much, and you get good education out of. But I would also always recommend educating yourself and ending with you probably don't want to pay an attorney to educate the whole thing, but at least talk to an attorney familiar with how the tax sales work in that state, and they can answer those detailed questions and hopefully steer you away from those potholes and pitfalls and areas where you can really get burned.
Hmm. Yeah. Yeah. At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Well, that's good. That's interesting. There's a lot of support behind behind it. Kind of like the real estate syndication space. There's a lot of coaches out there. There's a lot of coaches too. People that kind of took a coaching course on it, and now they're a coach on how to do the same thing in the industry, which I always find incredible. So that's interesting. But okay, so access online, kind of like buying properties at auction. Most of them are online, but I'd imagine the ones that are in person, you can kind of get better deals, because one of the challenges we find with online auctions is everyone can access them, right? Auction.com, all these other different websites. And so you
Mhm.
can pretty much, everyone can access them, which creates bidding wars, which means you don't get a great price. And you have a lot of people bidding that don't really know what they're bidding on. So they overpay, and that, removes any opportunities from you getting a decent deal. So would you suggest kind of skipping the online auctions and going to the in-person ones, or do you feel like there's still opportunities out there with online tax lien auctions?
Yeah, well, it depends, right? I guess I'm really good at the not directly answering questions like that, but it's one of those, if you can invest locally where you can drive the properties and do your due diligence right
Mhm.
yourself locally, that's always a much better scenario. That isn't always possible and definitely not possible when you get to a certain size.
Mhm.
And so that in mind, right, live auctions, I can tell you, right, based on data, right, that's one thing that Taxel Resources we do is we're a data analytics, aggregator and software provider for investors in this space. And yeah, data definitely backs up. You get a better return going to those live auctions. And so if your
Mhm.
goal is that, right, just keep in mind, right, the the game, right, that you're playing is really a cost of capital game, right? Because there's several very large institutional buyers in this space.
Hmm.
And if they can place enough capital, they're attending that auction. And so if it's an online auction, they're going to be there.
Hmm.
And so you're typically competing with them, and their cost of capital, I guarantee, is going to be less than yours unless you're just using your cash, right?
Hmm.
But I will also say, you can find better places to earn, 4, 5, 6%, right, than in tax liens with a whole lot
Hmm.
less work.
Yeah.
And so, just kind of keeping that in mind versus, on let's say live auctions, right? Or kind of these peripheral, models that are out there in the space where you can earn, mid-teens percentage return, which is fairly realistic if you're not looking to place, $10 million doing that, but a few hundred thousand, sure, you can earn a, 15 to 20% return. So, anyway, yes, you're exactly right. Finding and going to those live auctions is definitely an advantage.
Hmm. Okay, now without getting too much into the weeds here, let's kind of talk about also the different scenarios of buying a tax lien, right? So like I know some people buy tax liens and they don't really intend to actually foreclose and take title of the property. They might ultimately do that here and there, but for the most part, they're in it really for that interest rate, which can be somewhere in the mid to high teens. But from what I understand, and you're the pro here, so educate me on this, there's like a bidding war, but you like bid down the interest you're willing to charge the homeowner or property owner on the lien, right? And it's like a race to the bottom almost. So like a property with a lot of equity and a good location, maybe everyone wants that tax lien, right? And then so now normally you earn like an 18% interest rate, but then I say, well, I'll take 17. You say, well, I'll take 16. And like the person who's willing to take the lowest interest rate gets the lien. Am I missing something? How does that work?
Yes, so I guess you have that. I'm going to you mentioned something, so I'm going to kind of, close a myth that existed, or well, it actually was factual, right, but has been closed. The Supreme Court, U.S. Supreme Court, it was Tyler Hennepin Supreme Court case a few years ago that closed the door on, buying a lien with intent of owning the property at the end of the day.
Hmm.
Prior to that Supreme Court case, around roughly 50% of the states had a process. Well, probably less than that. Probably 15% of the states had a process where you buy the lien, and if it never redeems, right, you basically apply for a deed and you get the deed, right, for those
Hmm.
back taxes. Supreme Court said that's not constitutional, and so all states, except for one that's lagging, which is Illinois right now, have implemented statutes that don't allow you to end up with automatic ownership by owning the lien itself. It has to go through a second process, right? A foreclosure process that culminates in what I'll call a tax deed auction. And so if your goal in all of this is to own the real estate, buying liens is really not what I'd recommend. You might as well just attend the tax deed auctions,
Right.
which
Right.
there's now a lot more of because those states that never had them now do.
Yeah,
Um,
that's
but
right.
two exceptions, right? And I think before we hopped on recording, or maybe at the very beginning, Aaron, you mentioned buying a lien in New Jersey, right? New Jersey and Arizona have it set up to where the property owner, has to opt into that tax deed auction. And so there's a slight chance, right, that you might own that property. So I just wanted to kind of
Hmm.
dispel. There's a lot of information out there, and previously it was true, right? You
Hmm.
could do that. Today's world is that's more of a dinosaur. If you didn't buy it prior to 2025, chance of owning that piece of real estate for the back taxes just isn't a thing anymore. So
Hmm.
that aside, right? So back to your original question of how does this bidding take place? And there's really, well, reality, there's a bunch of different ways bidding takes places, but there's really two primary methods. One is the bid down method that you just mentioned, and several states implemented that where and it varies at the starting point. Arizona starts at 16, New Jersey starts at 18, Florida starts at 18, but you're bidding down, right? It's opposite of what people think of where, on TV it's like I'll bid 10,000, 20,000, 30,000, right? It's starting at 18% and you're bidding what you're willing to take as a return on that, right? 18, the next guy's like I'll take 16, 15, 14, and it bids down until somebody says, well, I don't, I'm done. I don't
Hmm.
want to take a 0% return.
Hmm.
And the lower bid wins, essentially, is how it works in that. Now, the caveat in that process is what's called a penalty. So in Florida, there's a 5% penalty. So no matter what you bid it down to, you're going to get that 5%. And you're going to get that 5% whether they redeem tomorrow or they redeem 2 years from now. You're going to get at
Uh,
least that 5%.
okay.
And so there is a lot of folks that play what's called the fast five game in Florida where they try to target folks that are going to redeem very quickly,
Hmm.
and they're willing to bid those all the way down to a quarter percent, right? And
Hmm.
so if you don't know that nuance, right, you kind of look at like, makes no sense. Why would you take a quarter percent return on your money? Well,
Yeah.
if it ends up being 5% that you get the next day
Hmm.
annually, that's a fantastic return,
Sure.
right?
Sure.
And so that's basically the nuance of how the bid down method works. The
Hmm.
bid up method is a lot more, similar to like a traditional auction, right? The lien amount might be, let's say $1,000, right? And then you're bidding a premium. So you're bidding, I'll pay $100 premium. I'll bid $200 premium, and
Hmm.
that bids up, right? And basically the highest bidder wins in that scenario.
Hmm.
But the nuance comes into some states will pay you interest on that premium and some states will not.
Oh.
And so that's, where you have to educate yourself. And because
Hmm.
if you're paying premium and you're not getting interest on it, right, that's just burning down whatever interest you were earning on the principal. So
Yeah.
those are the nuances of why I recommend doing your homework and learning, right, how
Hmm.
that state works so
Yeah.
that you don't get caught. I hear all the time, or at least enough, where people take the Florida Fast Five model,
Hmm.
go to Arizona because the bidding process is nearly identical. They bid
Hmm.
it down to a quarter percent, and then they're surprised when there's no 5% penalty and basically a certificate. And congrats, you won this at quarter percent interest for the next
Right.
3 years, right? And they're like, oh crap, that was a waste,
Yeah.
right? So those are the things that you try to avoid if you know what you're doing.
Okay, so it's really state by state, the laws tend to change a lot. So it might be best to be a successful tax lien investor, probably to focus on like one or two states to start, because it sounds like it's similar to a lot of real estate investing. I mean, I definitely practice where I preach there too, because I've focused on New Jersey my entire investment career. I think 99% of the deals I've completed are in New Jersey, and the other 1% was like Philadelphia, which is right across the river. So yeah, so I get it. It makes sense. You got to know your market, you have to know your laws, and they actually change here in New Jersey city by city. Like rent
Mhm.
control will change, from Jersey City to Bayonne, and they're right next to each other, right? If there's a big difference in the rent control
Right.
laws and landlord restrictions and so on. So I can see tax lien investing is similar. You want to know your market, and then I guess you also have to know property values, right? Because you can also bid on a tax lien and the deal has like no equity, or you go to the property and it's a disaster and it's like practically a knockdown. You're like, shoot, they owe 100 grand to the bank. I just paid 20 grand for a tax lien, but the property's worth 80. I literally now I just lost 20 grand, because there's no equity in it. And
Right.
right, so you gotta recognize that. And one note there, I think the tax liens we've bought were tax deed auctions, like accelerated foreclosures was the thing Irvington was doing. They had a bunch of vacant properties throughout the city, and inner cities will do this, and they got to get these vacant properties off their books. They
Right.
want to create revenue for the city, so they accelerate the foreclosure process. So these are like pretty much 90% through the foreclosure process, and we were able to like buy the lien, and then within like 6 months we own the deed. So that must have been an accelerated tax deed auction, right?
Yes. Well, New Jersey is, we're probably in the weeds a little bit. New Jersey's got some of the best, I'll say, blight remediation laws, right? For
Mm.
that, where if the property is abandoned, like nobody's living in it and it's just degrading, they
Hmm.
allow it to be accelerated. And so typically with a tax lien, right, from purchase to, going through a foreclosure, it's multiple years, right? This isn't a like a mortgage foreclosure where 3 months later, right, you might show up on the mortgage auction.
Hmm.
Typically, tax liens are 2, 3, 4, in some cases 5 years down the road. New
Wow.
Jersey built in that mechanism where, hey, if it's a lien on a property that's abandoned, right, they recognize that property's not going to get any better in an abandoned state. It's just going to get worse. So why don't we get it in the hands of an investor that's going to do something about it
Hmm.
before it does get? And that sounds like that's what you ended up buying, which is
Yeah.
on the board of the NTLA, we tried to get other states to adopt it. Unfortunately,
Hmm.
it's not very, very, very low priority compared to all the other arguing going on in states these days. But
Hmm.
wish more states would adopt that exact statute that New Jersey has for sure.
Well, that makes sense. I mean, a lot of these inner cities is really struggle from abandoned
Mhm.
properties, and what's it called, the broken window rule or something. Like when the neighbor's house is dilapidated, then your house becomes dilapidated, and so
Right.
I remember I bought a property one time. Oh, we do this all the time, but I particularly in Vermont, it was a vacation property near Okemo ski resort, And it was in this kind of like low key little neighborhood. And I bought the property. It was a fixer upper, and I do all the landscaping and spruce the thing up and make this property really look nice, have some curb appeal. And all of a sudden, I noticed, oh, the neighbors started doing their landscaping, and then the guy down the street who had a bunch of crap in his front yard, all of a sudden that was cleaned up, and like the neighborhood started like improving itself, and it all took was me to, I know, of course, my ego, I take credit for this, but to improve
Oh,
my asset there. But you see that, and it can work the other way, right? Where abandoned properties in inner city areas, they get trashed in the front yard and they're falling apart and they're dilapidated, and then the neighbor's house starts to kind of look the same, and then there's another guy down the street, and then it creates this environment where you have a very ugly, undesirable neighborhood, right? And then people move out, and schools lower in value, and so on. And so yeah, it's a really multiplying effect there. So I think that law makes a lot of sense.
absolutely. Yeah, I think it's fantastic the way they've made that function and I'll say you should certainly pat yourself on the back because we see it all the time of the, tax deed investors that buy those vacant properties. It is the worst property on the street, 99 out of 100 times.
Hmm.
And it's bringing the whole neighborhood down, right? And
Yeah.
they go in, buy the property, fix it up, turns into probably the nicest house on the street in many
Right.
cases, but the whole neighborhood, benefits from that. And
Yeah.
neighbors will come out and be like, that's, that was the worst house. It attracted all the riffraff, right? And now it's, the best house in the street. So it's,
Yeah.
obviously I'm biased too coming from the space, but I think there's a lot of good and positive that comes out of those scenarios.
Yeah. Yeah. Okay, so we talked about how you can kind of source these tax liens online or in person in auction. There's different ways to make interest on your investment. One quick question: when you pay the premium, right? So if you're buying a tax lien that's worth 5,000 and you pay a premium up to 10,000 because it's a really good opportunity, who gets that 5,000 extra? The city or the owner of the property?
Well, it depends, right? So I'll speak, it depends on the state, right? Every
Okay.
state's different. So New Jersey, with the change to, out of Tyler Hennepin, that actually goes back to the previous owner, right? Or
Hmm.
at least they have the opportunity to come claim it.
Yeah.
And Maryland is an overbid state, which actually gets applied to the purchase of the property, right?
Mm.
Which then again gets put into a bucket of funds that are available to the previous owners to come claim those. And then there's states where Indiana, which I'm not as familiar, so there might be somebody out there who can correct me on this, but the premium you bid ends up going to the county, right? But there's a second tax deed auction that happens down the road,
Hmm.
right? And that's where the ownership, right, and the equity is available to the previous owners as well.
Mm.
And so it kind of depends, right? And so it is very, very state specific.
Okay, interesting. All right. And then so what are the risks? How do you lose money doing tax liens, and why would someone not want to potentially jump into this industry?
So really the biggest risk, right, and is really not fully understanding what you're buying, right? It's
Hmm.
underwriting the property or the lien just like you're buying the property because in general, right, which this isn't wrong, right? In general, you're buying and you're being secure, you're buying a lien and you're secured by the real estate, which in theory, right, is 20 times, the value of the lien. And so
Hmm.
the margin of safety of something happening to that property and degrading, down to where it actually affects your investment is very, very low. It's not zero, but it's very low. But, right, and this is the key thing, the not every lien, right, is on a property that has value. And you mentioned this earlier, Aaron, but I've seen liens, right? I'll take a step back, right? Anybody that's looked at a parcel map of any city with any, Phoenix might be an exception. I haven't actually looked at Phoenix, but it's just laid out as a grid and it's all nice and neat. Most cities aren't that way. So when you look at the
Hmm.
parcel map, right, it's weird, right? You got these weird little parcels, these little corners, right? These little where multiple parcels come together and you end up with this weird shape, right? They just couldn't get it all to fit,
Hmm.
right? Liens will be sold on those because the county doesn't they don't intentionally say, "Hey, I want to sell this." All they're doing is like, what parcels don't have their taxes paid? I'm going to put them for sale.
Hmm.
Because of that, we've seen liens bought, right? And people complain about it, bought on what ends up being just a mailbox or a
Hmm.
chunk of sidewalk or a piece of swamp landlocked in the middle of nowhere, right?
Hmm.
That's very common in Florida. And if the property has no value to it, then then the chance of actually recovering that is very low, right?
Hmm.
You could let it ride, you could foreclose on it. Whoopee, you own a mailbox. What are you going to do with that, right? You're
Right,
probably
right.
not going to recover your investment into that at that
Hmm.
point. So the biggest thing is just making sure you're underwriting that lien just like you would underwrite the property. If you would buy the property, then okay, buy the lien. That's probably the biggest pitfall, right?
Hmm.
Number two, right, is really understanding procedure, which we talked about, or I talked about a little earlier, of not, I'll say, bidding overly aggressive, right, where
Hmm.
you end up earning nothing, right? If it's a bid down scenario, or in a bid up scenario, you bid a bunch of premium, which you're not going to get back,
Right.
right? Your return again goes down to near zero.
Hmm.
Those are probably the two most common methods of not earning anything or losing, right, your principal by
Hmm.
far.
Hmm.
There are many others, right? Wild scenarios where, okay, and these are just aren't common, so I can't say you really have to worry about them, but they're things that happen, where the lien was sold and then it went to a tax deed auction. I've heard of this happening in Florida, sorry. And then the tax deed auction occurs and the secondary loan, right, second mortgage wasn't notified correctly, and so you end up owning the property, but it's still subject to a second mortgage. Is that
Right.
possible? Yes. Is it likely? No, right?
Hmm.
Should you make all of your decisions and do your underwriting to try and eliminate all those second mortgages? I would say no,
Hmm.
right? But that's something that can happen. The other thing that we've seen happen is you buy the property at the tax deed auction, right? Ends up burning down, right? For whatever reason. And that's something to keep in mind, right? Is in some scenarios, there are very disgruntled owners on the other end of that process, right?
Hmm.
I am a firm believer that everybody should pay their taxes and contribute to what those taxes go to, right?
Hmm.
Paying teachers,
Hmm.
paying policemen, firemen, paving the roads, right? All of those
Sure.
things are needed, and you need some form of enforcing that, right?
Hmm.
Otherwise, if there were none, nope, why would anybody pay their
Right,
property
right,
tax?
yeah.
But yeah, folks that on the other end of that usually are not happy about this happening.
Yeah.
They're even in the picture. And quite frankly, the vast majority of them aren't even in the picture. These are properties that have been abandoned for whatever reason.
Hmm.
And that's part of why they're in pretty rough state when you do end
Hmm.
up owning the real estate. So
Yeah.
those are a lot of the pitfalls that you can fall into, Aaron.
Okay, interesting. And what about the lender? What about the first lien position? Let's say you buy a tax lien, your goal is to get the deed, you've structured it that way. But then I believe you can't foreclose over like a first lien. You still owe that debt, right? Isn't that still tied to the property, or how's that work?
That's actually one of the major benefits of tax liens in almost all states. I know New Mexico, it's not this way. I think Utah is the other state that doesn't do this, but in all the other states, the tax lien actually has what they call supermajority
Wow.
position. So it sits in front of the mortgages, right? Primary, all of the other mortgages, if the tax deed foreclosure goes through the way it's supposed to, those those entities, right, anybody with interest had an opportunity to come forward and pay the taxes, right, add it to
Hmm.
the bill. If they choose not to, their actual interest gets extinguished. And
Hmm.
so, if there is a primary mortgage or second mortgage on the lien, very, very likely it never gets to that stage because the mortgage holder is at some point going to hop
Yeah.
in and say, it's not worth losing $300,000 I have invested in this property
Right.
for a $5,000 tax bill.
Right.
Want the property owner to pay it, but they'll
Mhm.
just go ahead and pay the
Yeah.
tax bill to prevent that from happening.
Invoice the bill.
But there is the chance, and we do see it happening like more often than you would imagine,
Hmm.
where somebody's asleep at the wheel, right, at the
Hmm.
mortgage company, probably more like um, personal lending, right, not
Yeah, yeah, like
corporate, but
private.
like
Hmm.
personal lending, and they think it's secured through a mortgage. They never really check on it, and
Hmm.
it goes all the way through the process, and their mortgage ends up getting extinguished. It's crazy.
Wow. Yeah. And that's why when you sign up for a mortgage here in New Jersey, your taxes are normally included with your mortgage payment. You have your principal interest and your taxes, you kind of pay in all one shot every month. They hold an escrow that pays the taxes. A lot of times your insurance is included in that too, right? Your homeowner's insurance, all that for commercial real estate, that's less common. Okay, that makes sense. That makes sense. All right, Brian. So, you definitely seem like the tax lien pro here. I've had a good experience in the tax deed auction that we did. I think we got about two deals in that, which is pretty good for great prices. So, hopefully more of those come up and we can take advantage of those as investors. But how can people reach out to you and learn more and kind of what do you have going on these days?
Yeah, well, I mentioned earlier, that there's really two aspects to the space that we are involved in. One is we're still very much involved in the data analytics, right? Compiling, your first question of when and where do these auctions exist?
Hmm.
When we got started in the space, 2010, nothing like that existed, right? Just finding that those basic answers of where are these auctions, when are they, what properties are associated with them, and what is the information behind those properties, all the data points. That is what Taxel Resources, right, our company compiles. And
Hmm.
so we're essentially all the tools that successful investors need, right? With one exception, we're not an educator. We have some really good resources that are free out there. I interview industry professionals, attorneys, right? And so if you want to educate yourself, you can certainly go peruse the website and all the podcasts that we have up there.
Hmm.
But once you know what you're doing, then we have all the tools, right? Think of a Zillow, right? But for the tax sale space and
Hmm.
finding which ones that you want to buy.
Hmm.
So that's one half of what we do, and the other half is in really starting in 2020, started a fund that is focused on tax deeds. It is a 506c fund, so it's only available to accredited investors. But folks that want to earn a decent return, but don't necessarily want to do the work, right? Then they can participate through that mechanism as well. That's called Mount North Capital, and those are the two ways. And depending on what your involvement you're looking for, that you could get a hold of us or get a hold of me, and we can explore it from there.
That's great. That's great. Okay. And what's the website, or how do they get in touch with you there?
So yeah, tax sale resources, it's not a short one, but taxsaleresources.com.
Hmm.
If you want to go that route, and then Mount North Capital is again mountnorthcapital.com. And you can, go to that website and it'll, depending on what you're looking to do, it'll point you in the right direction from there.
Great, great, excellent, Brian, excellent. Well, maybe I'll check that out myself, learn some more things about this. I admittedly am not an expert in the space. That's why I want to have you on the show here today on the Passive Cash Flow podcast. So thanks for coming on. And, again, to our listeners, we'll put Brian's contact information, those two websites in the show notes. Brian, be sure to shoot that over to me, and we'll put that in the show notes here so you can get in touch with Brian and his team and learn more about this space, which I find very interesting. As I said, I've had success a little bit there as well. Not as much as you, but definitely, I've had a good experience with it. So definitely interested in learning more. And, to our listeners here on the Passive Cash Flow podcast, if you're getting value out of these episodes, we come out with one every 2 weeks. Share it with a friend, hit the like button, the subscribe button. We're on all major podcast platforms and YouTube, so check us out there. We also have like other webinars on YouTube and other educational content. So you can put People's Capital Group in there, or Passive Cash Flow Podcast. You can find us on YouTube there. Check out our other content. Of course, I'm Aaron Fragnito, People's Capital Group. We help people build and preserve their wealth in New Jersey apartment buildings. If you want to learn more about that, go to peoplescapitalgroup.com. And enjoy this cold day here, Brian. Probably by the time this episode comes out, it'll be a little bit warmer, so we'll see.
Yes, let's hope so. Let's hope so. Thanks for having me, Aaron. This is fun. Hopefully, folks learned a thing or two, and if you have interest, don't be shy.
All right. Thank you, my friend. Have a great day.